Step into Mind Matters, where we reveal the high-stakes world of CEOs, from their first-day jitters to game-changing strategies, and equip you with invaluable insights and practical advice essential for your personal growth and leadership journey. And now, Mind Matters.
Welcome, everyone. I'm your host, Kendall Raessler, and today on our podcast, we have a remarkable guest joining us. He brings a wealth of knowledge and expertise as the chairman, CEO, and founder of Capra Bank. Please welcome Tut Fuller to the show. Welcome, Tut.
Yeah, thank you for having me. Yeah, excited to do this.
Really excited to have you. And for our listeners, Tut, I would like to get a little bit of background on you so they have a better understanding of the journey. So if you wouldn't mind starting your journey from as you were progressing through, that'd be wonderful.
Yeah, so pretty darn atypical for banking, I would say. But really, it's just a story of following what your interests are. So grew up, I was a science and math kid. Thought I was an athlete. Thought I was gonna go in, be a doctor, and be an orthopedic surgeon and sports medicine, and did that through college. Went to medical school at University of Michigan, and my father told me that physicians aren't any good at business, so I need to get my MBA. So I got my MBA at the end of medical school and realized I really liked business. So graduated with both, and then didn't go to residency, didn't practice medicine, and went on and was a consultant at Bain & Company, and kind of felt like it was my residency for business. And then from there, our family started a bank back in the Great Depression. My great-grandfather did. My grandfather ran it after World War II. And then my father ran it, and he asked me if I'd be interested in coming back and helping grow it. So I did, and came back. Did that for about 10 years, 9 to 10 years, and company went from, I think, 5 billion or 6 billion in assets to 20 billion in assets in the 9 or 10 years I was there. My end role, I was a CEO, one of the member banks, and then regional president overseeing about half of the assets, about $10 billion in assets. And really what it came down to is, we got into a street fight about how you should run a bank, and we lost. So I was out, and my dad, as chairman, was out of that public company in the same month. And then I started trying to think about if I could build what would be an interesting bank, and a bank that took care of and targeted medium-sized businesses on the business side, and then the people that started them, ran them, managed them on the consumer side. And that's how Capra Bank formed. So yeah, go for it.
That's a very interesting. You're our first guest that's had where you ran a bank before, then started up your own with your family and doing that. So you would have had some mentors to be able to help you on the back end to understand that. A lot of our listeners have challenges when they start right in. They don't know what to do. They don't know what to think. They're told by the board what they have to do. They're told by their employees what they want to do, but how do they move to get their stuff moving forward that they want, their initiatives? Makes it difficult. Did you have any mentors that really helped you with that to start with, Tut?
Yeah, I mean, I think you always pick out a good manager here or there that you can get advice from, right? And that you have a personal bond with. I think it's tough to have a mentor if there isn't a personal connection there. And I had some of those. My father was one of them. Another one, a person who I took over the one bank I ran, he was one. Interesting thing is that a lot of the mentors you thought you had weren't your mentors at all, is what I found out. And so, that being said, so you're starting this bank, and there's a complete lack of who you thought were your mentors. And that's okay. I think also the bank, we're starting, a lot of the advice you would get to me is it's pretty aged advice. I think technology's come a long way in 5 years, especially targeting our preferred market segments. And then the pandemic happened and changed customer behaviors, whether that's on the business side or consumer side. And I don't know how many years it fast forwarded customer behaviors, but a lot. And with those two big things, a lot of what I was told to do, I don't think really worked or would have worked. And so, the good news is a couple of my better mentors are on the board of our bank now and not affiliated with the other place. I've also been able to hire a lot of the people at that company that I really respected and bring them over to our bank. But what we're doing is, we're trying to grow the bank for today without the technical or asset hangover of the past. And we bought a $50 million bank in end of 2022, and today we're sitting here at about 300 million, and just keep cranking, right?
That's awesome, Todd. That's an incredible growth for that fast already to be able to do that. When you talk about, I want to just stick to the mentor part for a second longer. When you talked about the mentors and you had to find, who was on your side and who wasn't, all CEOs run into that challenge. How can you give a little more insight on that, of how you decided who was actually on your side and how you managed that? Is that possible?
Yeah, I mean, so some of them are ones would have been from outside of banking who, just had really respected them, and those ones are obviously fair game. Some of the other ones, actually, my scenario, it's actually pretty easy to figure out who aren't your mentors, because they're the ones who kind of sold out your family and you, and who you thought were your mentors for the last 3 decades. I'm 40, so people that I knew ever since I was a little kid, who you thought were your mentors and close to your family, sold out your family. And so actually it was pretty easy in my scenario. As it turns out, I probably should have been thinking about that a little more, but in the past. But I'm a firm believer in things happen for a reason. And I'm okay if I had some mentors that went away and turned out to be not great people, because whatever happened got me here. And I just feel pretty fortunate, right?
Change is good if you embrace it, and that's what I hear that you just did. Is you embrace the change to make it better. And I think our listeners will understand, that you took the ones that you needed, and that's awesome, and that helped you. But on the same token, it does show up very quickly if you look at the signs to see who's aligned with your values. And apparently, selling your family out and selling you out is definitely not one of your values.
Feel right? It probably isn't right. And I think too, just for me, it's about following what you're interested in. And I don't know.
I agree with you, Ted. If you're having fun, and means you're doing what you like, it's easy to grow. It's easy to do. If you're not having fun, I understand that side of it as well, that it makes it more challenging. Nobody wants to do it. So what would you say is your can you share one of your significant risks that you took when you were changing from the family bank to your bank? And how did you contribute it to the success that you're having now to have a growth in such a large growth in a short period of time?
Yeah, probably one of the bigger risks is just taking a significant portion of your net worth and throwing it into a startup. That'd be one. That's the math. That's the math side of it, right? But there's, buying a bank, for us, it happened pretty quickly. That being said, there's a long chunk of time there where there were plenty of jobs to take that would have been leadership roles, and would have been probably, they would have paid more than my previous job that I had. But it just didn't fit what I thought we could do. And so, yeah, I mean, if the thing wouldn't have gotten approved, well, then those are all opportunities that got passed up. But, I think once we were on the path and we knew it was possible, you knew what you could create, you ran the play out. But no, I mean, I think I probably, upon exiting in February 2022, I think I probably could have just done nothing and sailed away into the sunset and lived off of whatever stock I had. That would have been pretty easy, actually. But I mean, it risked, and my brother and others risked a lot to put capital into this company. And maybe that's part of the reason too that we hired a lot of people that took big risks, because I had a lot on the table too.
Well, you see, that's a very unique piece that I want to point out to everybody that's listening today. Is let's remember, Tut is not just a CEO; he's a founder as well and chair. And by doing that, Tut, that means you have different roles that you're playing, different hats that you're spinning, and to be that CEO that has to invest his capital, invest his livelihood of all he's built into that, doubles the anguish, stress, however you want to lay it out. How did you have any troubles handling this stress? Because there's lots of our listeners that honestly, something like that would not be easy to do.
Well, it's not easy. And yeah, it is stressful. That being said, I don't know how many really super great things ever get done that are like easy or not stressful. What I try and do to manage it is like only focus on the top couple important things, and not spend a lot of time worrying about the rest of it. Because if you spend your time worrying about the things, let's call it after number 5 or number 10 on your list, you can spend a lot of time worrying about stuff that I just don't know at the end of the day if it makes that much of a difference. So I am kind of I'm one to constantly see what the priorities are, focus on the priorities, make sure other people are focused on the priorities, and if some little thing that's number 60 on the list doesn't get done, I don't spend any time worrying about it because it just isn't going to matter. And in managing people too, I mean, you could really pick apart number 60 on the list if you wanted to. It just doesn't. I don't think it matters.
Well, you say the people, that brings me up into that as well. It is, you have the goals, you have your vision, you got your priorities, right? You've got new people that you brought into your business in order to grow it. They may not have the exact same priorities as you. How did you manage your people as you're scaling? Because your scale, you just mentioned, is incredible. And when you were doing that scale, not everybody will be on the same page, not the same culture. How did you manage your culture so that it ran along with you?
Yeah, I mean, I think there's a couple things. Like one, if you just divide it up, one is setting the vision and the direction, right, and the destination. I think two is making people fully understand that and communicating that in a way that they understand whether or not they're really drawn to it or not. And the last thing is like making them a part of it, right? So I think if you go back to 2020 and I think we're getting close to our first anniversary here in my hometown of where we opened like our main headquarter branch. And I think the quote in the newspaper from 2 years ago sounds like something that could have been said yesterday. And so I think that destination on the horizon and what that end picture looks like have stayed pretty uniform, right? There's a lot of work that goes into making sure that happens, but so one, communicate and make sure that stays pretty steady. I think I learned early on that if you have a CEO or a partner or whoever, and they constantly change, if they change this much, every level underneath them changes that much. And so you get this just monster whipsawing of what happens 1, 2, 3 rungs under you, and it's just not acceptable. So you got to say where you're going, why you're going there, make sure you clearly communicate it and get everyone on the same page, right? Then once you have that, developing out that strategic plan should be, and the plan to do that should be a group effort, not an individual. So they're a part of the plan. And then the other thing we've done here is they're owners, right? So we've let them buy in, so they actually are a part of this. And hopefully between all that, I mean, people know what they're signing up for. People know where we're going. That hasn't changed. They're a part of figuring out how we get there, and they're part of the upside. And we're just really selective on who we hire. I think we scale differently because we're focused on having higher tech and lower branch counts. And so you don't have to hire as many people, and you pay better, and you have way better benefits, and you can get real choosy.
Those are all very key points to help and scale, which is where I'm going to actually go next, is about scaling. But before I do, I want to ask one question for you. You know, you've got to talk to the board. You got to talk to your team. You got to have your vision. You've got your family at home. There's a lot of work-life balance that has to happen. How do you handle the work-life balance with so many plates spinning? Do you put it in one jar, a number of jars? How do you handle it?
Yeah, I don't think that that's really, I don't know that there is like a balance thing that happens, right? I think there's like hopefully it's like a coexistence that's harmonious or something. Because I'm constantly thinking about work, but not because I'm forced to, it's because I want to. And I'm not focused on this many hours here, that many hours in this other place. I do kind of, just like everything, try and evaluate time spent on things, but I want to be present for important things. You know, it doesn't do me any good to be at home and say, now I had this many hours at home, and then I'm sitting there on my phone on TikTok or something. Like, be present. So I don't know if I answered that really well, but
I think that's good advice. Sorry, keep going. I didn't mean to cut you off.
No, I just don't. Yeah, I don't know what else. I try not to work on the weekends, like work. But I've done that for forever, even when I was at Bain. That doesn't mean you're not entertaining, but also I probably wouldn't entertain a client I didn't like or want to be around over the weekend or at dinner. We can go to coffee for those ones.
So. It's nice that the world has gotten so big, or the world is so big, and technology allows us to get out to see people, but also makes it that we can spend time and do business with the people that we like and that we want to do business with. That is a key part, and I hear that in your message, and I wanted to point that out to the listeners. But let's talk about scaling. We kind of went into that, and I said I would ask one question. I'd like to talk about, what strategies have you employed to scale your organization, whether it's expanding geographically or growing in terms of services and products.
This episode is powered by Onist AI. Onist's optimized onboarding process and minimized documentation result in an expedited and seamless financing journey for clients, enhancing their contentment and commitment. Through identity verification, financial data validation, and creditworthiness assessment, our software empowers companies to make well-informed financing choices, bolster application speed and customer uptake by 30%, and cut operational costs by a significant 70% with Onist AI. For more information, visit onist.ai.
So when you say scale, do you mean get bigger, get broader, or do you mean actually capture scale from an operational efficiency standpoint?
From the first one.
Okay. Yeah, so get bigger. Well, it's about, we had to buy a charter. Because if we wouldn't have bought a charter and we would have tried to start our own charter, we would have spent an extra year or two. So we bought a charter, and then instantly it was about branching into markets where I had relationships with people who I thought were really great bankers, and in communities that I think are great banking communities. That doesn't mean sexy vacation spots. That doesn't mean something that some public analyst of a public company stock thinks is a great market, but doesn't really understand how banking works.
Yeah.
Those don't have to be the same, right? They don't have to be flashy, because we're not going into this to, I'm not viewing this as a W-2 here in Canada, but W-2. I'm not viewing this as like I'm just getting a paycheck, and this is why I'm here. And my goal as CEO is to make the most amount of money in my paycheck and like keep the charade going until it ends. That's not the goal here, right? If I did that, the person I would hurt the most is me, and the person I would hurt the second most is my brother. And so that's just not the goal. The goal is to find really great bankers and really, really great markets for our bank, targeting medium-sized businesses and the people that own, operate, manage those, work for those companies. And so you had to identify those relationships and those people, and then you work through the process of expanding, right? It's, yeah, I don't know. It's just not, to me, if you start with the customer and you figure out what your target markets are, and then you develop the products and technology that solve for critical gaps of where they're getting those services, and then you have the great bankers that have the relationships, like, you're going to get that business. There's no reason not to get that business.
Absolutely. I agree with you. You're identifying something that's missing, you're targeting on it, you're pushing that forward. But it should be in the client size. It should be for the customer. Because if it's all based around you and your dollar, and a lot of CEOs run into that trouble because they got a board that says to them every year in a company that's existing long, it is, I want 15% more than last year, 18% more than the year before, and so on and so on. So they're focused on the dollar versus focused on the actual client and their actual product, making it that it is something that is better and easier. Because like you're talking to me, when I'm hearing you say, you're doing small businesses and the consumer loans that you're doing. Not all of them are the same. You can have an 80-year-old person and you can have a 20-year-old person. And the reason I use an age gap difference is because usually the 20-year-old one knows how to use their phone and their technology really well. The elderly person doesn't have that ability to do that. So when you're scaling your market, are you taking those type of considerations into place as well?
Yeah, I mean, I would say where it's allowed from a compliance standpoint, yes. I would say more broadly, though, and maybe this is the more applicable thing, which is one of the hardest things that you can do, I think, as somebody in a leadership role, is deciding we're not going after that group of clients.
Mm-hmm.
We're okay if they're not happy with our product selection, because we're going to build products and services and technology that focuses on solving for the 80 to 90% within our target markets. And when you start trying to make that other 10, 5, 1% happy, you end up with something that just does not jive. And usually you add a ton of complexity. And when you add a ton of complexity, that means you can't scale your back office. There's a lot in our bank built into making the proper investments to properly scale the back office. We are high growth. We are growth oriented, which means nobody should be able to benefit from capture and scale as much as we can. And you can do it if you're a huge company. It just means you're going to have to fire a ton of people when you put in the automation, and then that's not good news. That's bad news.
It is for those certain people. I like to always say that years ago when the car first came out, the horse and buggy people that made the horse and buggy thought the world was being turned upside down and it was all going to be bad. In today's world, we hear that with technology, because I love that you're talking about automation and true automation, where it's actually creating operational efficiencies on the back end for you. Hugely important. But that also has to scare your team around you as well. Am I going to be irrelevant later? The client on that side is fantastic, but you're juggling both sides of that. Have you run into that, and how have you dealt with that?
Well, so, and I'm 100% in agreement with you. I would say our goal here is to not run into that, because we have started so small that we're implementing that stuff on the forward end, on the front end of it, so that we don't do that. But no, I've been on the other side where you're implementing it and it is the right thing to do for the client, the company, the shareholders, and it doesn't get done for political reasons. That is not the right way to do it. So one of our goals is just to build it in on the front end so that as we grow, we don't find ourselves in that situation. I think one of the things we're trying to do is lean in to scale what we would consider the least scalable areas of banking and use whatever automation, AI, whatever we can do to scale those areas.
So you're focusing on what you do best. You're focusing on the client. You're focusing on your stakeholders. Yet when I hear you speaking, I see your growth is incredibly fast. I see that you're not worried about the people that you're talking with, about the people on the back end, about them losing, because you're making your adjustments on the front end, which is all fantastic planning. And I think a lot of CEOs don't understand. They lose their focus. And this is where we want to be able to show that you keep saying it again, focus, focus, focus. And I really like that, Tut, because as the CEO, and as CEOs are out there, I've heard a number of them saying, well, my people around me are telling me to go left, right, and they're confused and they lose their vision and their dream. Because when we're talking about larger banks, there's a lot larger banks out there in your area. How do you compete with them? How do you make it different than them? One way is focusing on your niche, which is what you're talking about, and finding those little intricate pieces in between, which makes your bank stand out. In my opinion, it makes, for the consumer, one of the most best things for them, because it's not just money driven, it's actually about them. Is there anything else that you would tell CEOs? Any advice that you could give them? We're coming to the end of our time, and I want to make sure that I can transfer that knowledge from you to them. Is there anything you would like to say to them? Any advice that you could give them?
Yeah, I mean, I don't know. That's not an easy question. Is there any other advice? I would just say, I think you got to really be an expert in your trade. You got to be okay taking some calculated risks. And the more math and analysis you do beforehand, the less risky it becomes. Because also, if it's going down the wrong track, you're going to be able to adjust faster. But I don't know. I think you got to have your spot on the horizon, and you got to paint that picture and make sure it makes sense from a math standpoint or economic standpoint or whatever you want to do, and bounce it off of the people in your organization you respect, and then figure out what are the 5 to 10 things that we got to do, and at what time do we need to accomplish them to get down the path. But once again, I mean, that is advice for CEOs that are owners, think like owners, versus I don't have a lot of advice to give to people who don't think that way. But no, it can be lonely though, I would say, and that's okay. It's part of the job.
It is lonely, isn't it? It is part of the job, and it's like, who do you trust? It's like those mentors you talked about. Tut, I would like to thank you very much for joining us today. I think our listeners will get a lot of value out of what you've just said. I know I sure have. So thank you very much for your time and spending it with us on this podcast and your expertise. I actually look forward to hopefully having you another time as well.
Yeah, I really appreciate it as well. This was a great time and great questions, and hopefully it's helpful to somebody. So.
Yeah. Thank you very much, Tut, and you have a wonderful day. Bye.
You as well. Thanks.
Thanks for listening. If you found this conversation valuable, please leave a review on your favorite podcast platform. We will see you next time on Mind Matters.